Excited for this webinar. This is one of my favorite webinars to host. We do this call about twice a month, and we go over the overnight trading strategy, its rules, how to trade it, how to like just kind of how to understand the nature of like the nuances of it and so on. We go over the statistics of the strategy. So any questions you guys have throughout the webinar, feel free to ask those questions. I'm likely to answer most of your questions, but there could be gaps in the material. So please ask those questions as we go along. Also want to give a shout out to those of you watching this in the recording on the website. I know we had to kind of change the time when we were doing this today. So do want to say hello to all of those of you on the calendar watching this in the recording. I also want to say hello to those of you who are watching this on YouTube. Want to say hello to you guys and welcome you to participate in any way that you can. Let's go ahead and get started. Before we jump into the strategy details of the overnight trading strategy, let's go over our disclaimer. As always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, well, let's go ahead and jump into this. Let's go over the how to trade the overnight trading strategy. So I always kind of struggled kind of starting off, but I think I'm getting better at it because I've taught this strategy probably like 24 different times now. And so once I get into it, I get into it. But I try to, I also know that some of you are like totally new to this, so I'm trying to make sure that I don't lose everybody. But let's kind of go over the preface or the methodology behind the strategy first. So I'm going to use this chart here. Here I'm going to delete all this stuff, and then let's go to a chart. I think that's the easiest way to kind of describe the strategy, and then we can go into the details of it, and we'll go over the results. We'll look at the journal and everything that you need to know to successfully trade the strategy. Okay. So the first thing I'll start with is just knowing it's important to recognize that in the Forex trading world, there's 24 hours in a trading day. So in stocks, you have like 7 hours, 7.5 hours to trade a day. And that's just the time when stocks are open to trade. If you try to take a trade in the stock market outside of those hours when it's open, you can't really do that. Which actually makes it kind of difficult to trade stocks if you're somebody who works full time and you're pretty busy or something like that. It's very difficult to trade options or be involved in the markets and close at the right time and all that kind of stuff. I think it's a lot easier to do in Forex trading because the market's open 24 hours a day. And it's active too, not just open. Obviously during the afternoon hours, the market's not very active, but it's still open nonetheless, and you can still take trades. All right, so it's important to know that because that's kind of where we get into the details of the overnight trading strategy. So market's open 24 hours a day. It opens at 5 p.m. Eastern on Sunday, and it closes at 5 p.m. Eastern on Friday. All right. And during that time, you have 4 different trading sessions. You've got the London market, you got the Sydney market, you've got the Tokyo market, and the New York market. Those are the 4 markets. Each one is open for approximately 8 hours a day. Some of them overlap in their time that they're open. For example, right now, actually just about a minute ago, or not a minute, 4 minutes ago, the Sydney market just opened up. So Sydney opened 4 minutes ago. And in about an hour, the Tokyo market's going to open up. And then that's going to be open until this evening. Okay. Much later this evening, maybe early morning, depending on where you live. Okay. Then we go into the London market in the middle of the night if you live in here in the United States. And then that will close at noon, so lunchtime. New York will open at 8 a.m. Eastern, and that will be open till 5 p.m. Eastern. And that's pretty much your trading day every single day. And so you can see how you get through a 24-hour period like that. We're actually at one of the slowest times right now. Right when Sydney opens, the market's a little bit slow. Sydney is kind of one of the less active sessions, which actually is a good segue into the next part. So I'm going to use an indicator on TradingView. By the way, this chart that we're using, this is actually TradingView. I highly suggest that everybody watching this, whether you're watching this in the recording or live, that you get acquainted with TradingView. It's perhaps the best trading platform out there. It's free. You can actually use this. Just sign up, go to tradingview.com, and you can look at all the charts on all the different Forex pairs. Okay. And you can also look at charts for stocks, and you can look at charts for crypto and whatever you want to look at. So when you're on TradingView, I like to pull up a super chart. This is called a super chart right here. It just shows you the candlesticks. It's the actual price of the market. I typically trade the euro dollar, so it's EUR USD. This is the most commonly traded forex pair out of all 28 major forex pairs. All right. And I have a forex watch list that I created, so I'm able to just pull up the euro dollar and just click on it, and it pulls up this chart anytime I want to look at that. Okay. In TradingView, once you have a super chart pulled up, you're going to want to go to indicators, and you're going to want to find this sessions indicator. So if you just type in sessions into TradingView under indicators, you'll be able to find this indicator. So I use this one called sessions on chart by this company called Orox underscore AIF is what I've been using. You can also use the sessions one by LuxAlgo. That theirs is pretty good. But yeah, this is the one that I've mainly been using. So I come in here, and then I like to go full screen mode. And so then I'm going to go click on the settings, which is up here in the top left of sessions. And you'll see that I've got different options here. So I've got, if I turn this off, it'll remove all those blue lines. I can turn this back on. I can turn on the London session. I can turn on the New York session. Here's the Tokyo, and then here's the Sydney. So if I have all four of them on, it kind of lights up my chart in a big way, and I'm not able to, if I light up my charts like this, I can't really see what's going on very well. So I'm just going to pull up one at a time. So one thing I want to show you, the most active trading session in the entire Forex world is the London session. So this is this green area right here. Now, the reason why I want to show you the London session is because like I said, it is the most active session. Right here, you had a little bit of an anomaly right here. This was the U.S. presidential election that caused that move. But if you follow me along here and just go look at, generally speaking, just the activity of the market, where do you see most of the activity? Hopefully your answer is in the green area, because otherwise that would mess me up here. But yeah, you can kind of see, like, for example, over here, pretty big move to the downside, pretty big move to the upside, all inside that green area, right? Over here, same thing, move to the upside, move to the downside, and then move to the upside again. Pretty much all inside that green zone. Same thing over here and over here. When you're outside of the green zone, the markets are usually a little bit more quiet. They don't move as much. They're less volatile. There's less volume. The banks don't really trade all that often outside of that green area. So this is important because this is a characteristic and part of the framework of the Forex trading world. So in this 8-hour period, every single day, although Forex is open 24 hours a day, most of the trading action that's ever going to occur is going to take place during the London session, which is key to the overnight trading strategy. Now, remember, when does the London session open? London session opens at 3 a.m. Eastern, and that's year round. Okay. And it closes at 12 p.m. Eastern. So, how I used to trade the London session is I'd actually come in here pretty late at night, like in the middle of the night, to trade the open of London. I learned pretty quickly that that wasn't very sustainable. You're not going to be able to trade the London session. It's not good for your health to stay up that late, unless, of course, let's say some of you watching this in, say you live in England or something, and this is a more sustainable time to get up. If you live in Sydney, Australia, this is at the end of the workday. You're typically going to set this up between 4 and 6 o'clock. If you live in Sydney, Australia, and that's in the evening. So that's pretty convenient timing for the most part. But yeah, if you live in the United States, it's kind of a bummer because you're like, oh, dang, that this thing's moving all the time, but I'm asleep during those prime hours, right? So So at the same time, for me, I'm a problem solver. I like to find solutions. So rather than just giving up and saying, "Oh, I'm going to be asleep during the London session," I would much rather try to find a solution to this, right? Rather than just giving up on it. And so that's where we birthed the overnight trading strategy. So, okay, so now that we've established that most of the movement happens during London, in fact, here's a number for you. 76% of all foreign exchange transactions, so all Forex trades, take place during the London session. Okay, so think about that. In that 8 hour period, 76% of every trade that's going to be taken in the day will happen during that time. And then 24% of all the other trades will happen in the other 16 hours that the market's open. Kind of crazy, right? In fact, that's just another thing too. Like that's something I've been thinking about a lot over the last couple of months is that um, because of that very concept, that concept's true in a lot of settings, not just with the London session and the Forex market, but it's true. There's like same thing with stocks. Like the first couple of hours when the stock market's open is when you see most of the action and things like that. Even in a month time frame, there's 22 trading days in a month. There's like a handful of days in the month where the markets really, really move, and then the rest of the month it doesn't really move that much. And so markets just work that way, period. And so the way I've learned to trade the markets is to identify timely moments when that volatility will kick in and try to take advantage of that to the best of my ability. Okay, so that's what we're doing exactly here. And we've just made it pretty simple for you to come in here and take advantage of that. Okay, so now that we've established that the London market is very active and mobile and stuff like that, so let's dive in more into the strategy. So another thing that's interesting, just an interesting observation, is when you go back to the sessions indicator, you click on settings and you click off London and you turn on the Sydney session right here. This is the session that is this Sydney session is the market that proceeds. It's the one that's open just before um, it's the one that's open just before London opens. Okay, so this is the one that we just entered right now. So Sydney opened like 13 minutes ago. In fact, you can see right here as we're doing this webinar that we just began just barely that little light blue line right there. That's because Sydney opened about 13 or 14 minutes ago. All right, so just barely started. And then over here, you've got the Sydney session from yesterday. This is the Sydney session from when we had the election, the presidential election the other night. And this was it a few nights ago and so on. That was a great night. You guys remember that? That was super awesome. You'll learn why that was super awesome over there. I kind of like it when the Sydney session's quiet. And that actually is the point of this. So the reason why I'm showing you the Sydney session is because this is the session that just precedes, it's just before London opening. Okay. And that's important because we use this session to dictate how big our breakout trade's going to be. The or how we're going to manage risk rather for that evening. Okay. So with this in mind, let me dive in deeper. Okay, so since we know that London is what succeeds the Sydney session, it's following, right? It opens up after. What we're going to do each night with the overnight trading strategy is we're going to box up the Sydney market, and then we're going to set up a breakout trade. So let me show you what this looks like. Let me actually do a rewind to just a few days ago. This was a really good trade right here that we took. Um, this was a really good trade right here. So if I come in here at the end of the Sydney session or towards the end of the Sydney session, the way the strategy works is every night, 5 nights a week, Sunday through Thursday, you're going to come in here and you're going to box up, take a little box and just put a box around the Sydney market, just like that. You're going to look for the lowest low and identify the highest high of Sydney. Then what you're going to do is you're going to place a long position at the top of the Sydney box right here. So I use this little projection tool, and you can find that, by the way, on TradingView. If you just come over here to the left side of TradingView, it's just right here. It's long position and short position. You can grab them individually over here. I like to star them so that I have them in the future up here in my quick tools. Okay, that's really nice to have them just right up there. All right. Then what we're going to do is we're going to forecast what the trade looks like. We use really good risk management with this strategy. So we try to tighten up the loss here. So I'm going to bring the stop loss to the other side of the Sydney box right there. And then I'm going to take profit 5 times what my Sydney box is. So I'm going to bring this up and I go up to there. And the reason why I know that's about 5 times is because it tells me right here in the projection tool, it says, 5.02. So I'm just barely over 5. And it doesn't need to be exact if you can't quite get it, but get as close as you can, we'll say, okay? So I'm going to just settle there with 5.01. So this is good. And you might be like, okay, what? Okay, I'm going to pause here for a second before I keep going. So what have we done up to this point? So every night you're doing this process. You're going to come in here, you're going to box up the Sydney zone. Okay, everything in the blue, you're going to box it up. You're going to put a buy stop at the top of the Sydney box and a stop loss of the buy on the other side of the Sydney box. And then you're going to have a take profit up here. Okay, that take profit is 5 times whatever you're risking. So you can see right here, it says I'm risking about 11 pips on this trade. So if I go for 56.6 pips, that's approximately 5 times what I'm risking on this trade, which is perfect. That's what we want. We want 5 times the reward. Why do we do this? So let's talk more about the mechanics of it. Before I finish the actual application of the trade, let's talk about the why here for a second, because sometimes the best way to understand something is to know why you're doing something, right? And so, why are we doing this? So, the whole point of this strategy is to take advantage of breakouts. Since we know that London is going to be a pretty active market and the market's going to go hard one way, hard the other way, typically, well, not all the time, but on occasion, the market's going to go hard one way or hard the other way. When that happens, what we want to do is we want to make sure that we get into a buy position if this breaks to the upside. Let's say it does. Let's say the market goes to the upside, we trigger long, and it goes up. We're going to make quite a bit of money on this trade if the market goes up from here. Okay, so if it goes up, triggers the buy. What that means, by the way, triggers the buy, it just means that the buy stop order, it's a pending buy. If it triggers, that means you get into the buy trade, whether you're at the computer or not. You're setting it up so that if the market goes up, you'll get into the buy, but it will only do so so long as the market gets to that price. Okay. Then as the market goes up from here, if it keeps going up and gets to the edge of this green area, that means you hit your take profit. If you hit your take profit, that means you made a pile of money. Okay. Yeah, you did really, really well. On any night, if you hit your take profit, it's pretty remarkable and you'll be very, very happy with yourself. It'll be very lucrative when that happens. So, and that brings us to the why. The reason why that's very lucrative is because think about it. You're only risking this pink area. That's how much is at stake because obviously you have to risk money in order to make money. So if this is the green area and this represents the opportunity is so much bigger than what you're risking, right? And so if we hit that green take profit and the market really does just break hard out of here, you could walk away with a pile of money, which is the whole point of this strategy. So a lot of systems out there, not the overnight system, have really high win rates. And so what that means is that they win all the time. But the problem with winning all the time is it usually means that you're not getting really big wins. And so strategies like that kind of do the opposite of what we just did. Like some people will take trades where they'll take trades where um, let's say their take profit's only like that big. Let's say it only goes to there, but then their stop loss is all the way down here, right? That's a high win rate, low RR strategy. We don't want to trade this way. Why do we not want to trade this way? Because although you'll win way more often and you could actually win 80% or 90% of your trades if you were to trade this way, The problem is that the 10 or 20% of the time that you lose, you'll lose so much money on that 10 or 20% of the time that you'll become unprofitable. You'll in fact lose money if you trade that way. So we want to get away from that style of trading. And people trade this way whether they realize it or not. Most people would say, well, I would never do such a thing. That's kind of a crazy style of trading. But the reality is 90% of traders trade this way, whether they forcibly do it or just unintentionally do it. And so that's why we're here, is to make sure that we trade properly, and that we're managing risk, and that we're taking trades that are such that it could provide us a significant profit. So when traders will finally, and not just with the overnight trading strategy, but when traders go out there and subscribe to systems like this, where you're asking the market for a lot more profit and opportunity, and you're only given so much for it to lose, this is when your trading will change for the better. And this is not just true with the overnight system. This is true with stock trading. This is true with crypto. This is true with all Forex and futures trading. You need to get to a point where you're asking the market for much, much more profit, because the market can provide. The market has the ability to provide. Like, there are moves. The market has moves throughout a day, throughout a week, throughout a month, throughout a year, that can provide huge, massive, um, like, the change in the market can be crazy. And a lot of us, especially when we're new to trading, I did this all the time, is I would forfeit those gains. I'd forfeit those gains because I just wanted to take my profit sooner, right? And obviously, when you're winning, you don't feel the pain of missed profits. Where we feel the pain is when we actually hit losses. So, for example, like, I took a trade not long ago where I ended up, I had a trade where I made $30,000 on a trade, and if I had kept the trade, I could have made another $30,000. Um, and and I obviously, it was painful to realize that if I had stayed in, I could have made more money. Um, but the thing is, I was okay with that because, like, it's like, oh, I still made 30 grand. Now, if I had taken another trade where I had lost $30,000, that's more painful, right? Because it's like I actually lost the 30,000. Like, it was money that was once in my bank account and now is gone. It does not exist anymore, or it exists, but it's non-existent in my world. It's gone, right? And so that's where we feel pain. And so because we feel pain when money leaves us, um, that's why our natural, like, side of us decides to subscribe to systems that have high win rates. And so we actually have to kind of put that away, that almost that tendency that we have, so that we can get to a point of profitability. But profitability is actually very hard because it requires us to submit to systems that are similar to this. Okay, so at the very least, whether you trade the strategy or not, I hope this concept rings loud and clear to you, because this is how most traders make money. In fact, I was talking to a couple of very successful traders recently, and I asked them what their win rate on their system was, and they said, "Well, Steve, I'm only winning between 30 and 40% of my trades." And I thought, no kidding, that's crazy. And most people would tell that trader that they're crazy. But the reality is that when that trader wins, they win just so much more than they lose. And so what I'm finding for myself as I trade successfully and as I talk to other successful traders, some of the most successful traders win less than half their trades. Like, they lose more than half their trades. Uh, and they win, 40%, they win 30%. If they're really doing well, they'll win 45% of their trades. So I don't know very many traders that win 80% of the time or win 90% of the time and are hugely successful. I actually know more traders who win less than half their trades and they trade for a living. So I just take that to the bank, guys, and discover that concept as you, if whether you've been trading for a while or whether you're brand new to trading, take that concept to heart, because those are the numbers that that work. And back to my original point, the market can provide those numbers. We just have to set ourselves up in the position to achieve them.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Okay, so now back to the application. So now that we've set up this one trade, what if the market decides to go down? Like, what if we set up this trade and the market actually, instead of going up, it wants to go down? Well, we got to be able to make money when the market goes down too, right? So that's what a short position is. So we'll set up a sell stop order. This is a short, okay? So you're making money if the market goes down. We want to put this stop loss on the other side of the Sydney box right there. And then we're going to drag this down 5 times our risk. And again, you can see that number right there. Now that's a little over. That says 5.3. So I'm going to bring that up to 5.0 or as close as I can to 5.0. That's good right there. We'll leave it at 5.01. Okay. I also like to extend these out just a little bit more so that when I'm trading the overnight system, when I wake up in the morning, I can actually see the progress of that system over time. Okay, so now that we've kind of set everything up, this is what the trade looks like up to this point. Okay, so every night, 5 nights a week, you're going to come in here and you're going to do precisely this. This is what your chart should look like on TradingView before you actually go into your own personal account to take the trade. If your chart does not look like this, then come back and watch this recording and make sure that you're dialed in to the, until you're up to this point. Okay. So you would have pulled up the sessions indicator, you would have drawn the box, then you would have put your projection on both sides. Okay. So what happens from here? Well, the next step as far as the application goes would be to actually take the trade. We're going to get to that part in just a second. We're going to have to use what's called a lot size calculator to manage risk. I'm going to show you how to identify and use a journal correctly, and that part's coming. But right now, I just want to go over the different scenarios before we get into the application so that we understand what we're doing here. If we were to set up our trade right now and walk away, the market can now do whatever it wants. You'll go to bed most likely because this will be kind of later at night. You'll go to bed and we'll see what the market does. So the market can do one of 3 things. Actually, I think it's 3 things, 3 scenarios. The ideal scenario is the market breaks out one way or the other. So a perfect scenario would be the market just breaks up pretty hard overnight, and then when you wake up in the morning, you've hit your take profit. That is Like if it did that every night, uh, I mean, that would be perfect. I mean, obviously that's not, I mean, the market's going to do more than that. It's going to do, it's like you're not going to get that every single day, but on some days that can happen. So that would be a perfect world scenario is the market just goes straight up. Because if it went straight up, you would trigger into your buy right here and you'd capture all of this as an opportunity. That would be all your reward right there. Another scenario would be the market just breaks straight down. And that's also a preferred scenario. If the market just went straight down, you could uh, make money on this sell and you'd be, doing very, very well. Okay, another scenario. Let's talk about the losing scenarios. Actually, I'll give you another winning scenario. Another winning scenario is let's say the market goes down first, triggers you into a sell, but then while you're sleeping as well, this market comes back up, stops you out of your sell. So you'll actually lose money on that sell there. And then the market triggers into the buy and it just keeps going up. That would actually be a winning scenario because even though you lost on this original sell order, you would have triggered into your buy and that buy would have made money. So that can actually be a preferred scenario too. I mean, if so long as you make money with it, that's not too bad. I don't see that one happening as often, although it will happen multiple times in a month. Okay. All right, so let's get into the loot. Those are the two ways you make money, and I guess a last way you could make money is the market could whip up and it could whip down, and you could make money both directions. That did actually happen to me one time in the last 7 months. Okay, so it's so rare, it's almost not even worth talking about because I mean, it was pretty insane because the market went all the way up to there and then went all the way down to here. And I made money both ways, but it was pretty rare. So I wouldn't count on it pretty much ever. Okay, here's how you lose money though, because obviously nothing's perfect. So the way you lose money with this breakout trade is I'll give you scenario one. Let's say the market goes up, triggers your buy, and then the market comes down and stops you out of the buy. Now you trigger into a sell. And the sell, let's just say it does nothing. It just kind of goes sideways the rest of the day. And by the time you close this, it's just at break even. So that kind of stinks because the market basically did nothing. You triggered into a buy, you lost money in the buy, you triggered into a sell, it lost or didn't do anything. Maybe it made a little bit, but you're still down on the day. That stinks and that is part of the strategy, and unfortunately you have to just take that loss, and I'll show you how to manage these in just a second, but that is a scenario that can happen. Another scenario to lose money is this. So the market could come up, trigger your buy, and then it could come down, trigger your sell, and then it could ultimately come back up and hit your stop loss. So you would have triggered buy, triggered stop loss, and you would also triggered sell. You would have sell triggered, your market would have come back up, you would have hit your stop loss on your sell. This is a full whipsaw. So a whipsaw is when the market goes both ways and it just whips you both. I mean, whips are an appropriate word because you feel whipped when you wake up in the morning. You get all excited to look at your phone. You're like, did I make any money? Did I make any money? And then you're like, oh shoot, nope, I didn't make any money at all. Um, so um, so in fact, you lost money, and it's not a fun feeling, and it can really affect your mood, especially when you're new to this. And I'm with you. I'm here to help you guys through that, because that can definitely affect you for the day. We meet every single morning, and so we'll meet together, and a lot of mornings it will be kind of like because we only win 40% of these trades, right? And so there will be plenty of mornings where we'll get together and be like, yep, it was a whipsaw morning. Okay, on to the next thing, right? And that's just going to be kind of a routine. But we have to let go of that and keep our mindset straight and just keep on going, right? So, so that's going to happen. And by the way, how often should you expect the whipsaw? So, what I've noticed is this will happen between 2 and 3 times a week. On a lucky week, this will only happen once. On a pretty bad week, this could happen like 4 times. But I would say 2 to 3 times a week is the expectation. So out of 5 nights a week, you're going to set up these trades. expect two to three times that it's just going to whip both directions. And you might ask, well, Steve, if it whips so often, like how could you make money doing that? Well, let me show you. So I think this is an appropriate point to bring this up. So let's talk, and we're making good time here. So this is good. So let's go to the overnight trading journal. This is where we keep track of all of our results with the overnight trading strategy. All the members in the program have access to this. So that's everybody here live. If you're watching this on YouTube, you're going to have to subscribe to one of our memberships to be able to get access to this. But this is where we keep track of our results. Obviously, every morning we come in here and we add a new result, which is part of our morning routine, just to come in here and be like, okay, this is how the trade did. This is where it's at. Okay, perfect. We're all on the same page. Awesome. Let's move on. That's pretty much what that's all about. So, one of the ways we overcome the constant losses, because let me remind you guys, this has a 40% win rate, in fact, it's 39.90%. So for every 100 trades I take, I'm winning 40 of them and 60 of them are losing. So that is a lot of losers, right? So how do we overcome so many losses? And there's two reasons why we overcome them. Number one is when we win, the market can go, like when we go back over here to this example, if this market takes off in our favor, we're going to make quite a bit of money. In fact, let me actually, before we get to the second reason why this works is let me watch this fast forward here. So this was 2 nights ago, right here, and this market went in our favor big time. All right, let me pause it. So by the end of the trading day, this euro dollar had basically just exploded. So this was a perfect day. Okay, the market triggered long and it just kept going and going and going. And by the end of the day, you had made a pile of money. Okay, that's what you're after most days. Is that, well, every day you're after that, but not every day it's going to provide that. This is a perfect world scenario, and that's the scenario we're at. So what we have to do is when we get this type of move, we have to make sure that we make the most money possible. Okay. So let me say that again. You have to make the most money possible when that happens. How do you make the most money possible? Like, how do you know which day that's going to be? Well, we actually don't know what days the market's going to do this, because this is kind of like a perfect scenario right here. So the way we kind of overcome that is through statistics, right? So I expect about once a week or once every, like, well, it's in a week's time, I expect to get about 1 or 2 wins. Maybe one of those wins will be kind of small, maybe a bigger win. About once every week and a half, I'm expecting a pretty substantial win. So once every 6 or 7 days, I'm thinking there's going to be a huge move. Something like this. Okay, that's pretty characteristic, especially back in August, September, June, May. We had really big moves like this, and almost like clockwork, they'd come every week or once every week and a half, and they'd really feed you for a while. This is how you build your account, is on days like this. Okay, so we have to put the most amount, this is the key, you have to put the most amount of capital possible on this move. So the way we do that is through this sequence multiplier, which is over here. So we put together this sequence multiplier, and what this does, it's this little thing right here. It's a matrix. And what it does is it basically says, it tells you how much money you should risk each day. So on day one, I usually risk 1/4%. So that's a pretty small amount if you think about it. That's only just 1/4 of 1% of your account. So if that's like 1/400th of your account. So on $100,000, 0.25% is $250. Okay. If you have $1,000 account and it's a smaller account and you're just trying to grow with $1,000, which I'm helping several of you do right now with this strategy, what's 0.25% of $1,000? Well, it's only $2.50. So you're only risking $2.50 per trade, right? And so you're just kind of you're getting this to fit wherever you're at with your trading account or wherever you're, trying to grow and so on. Okay. Um, all right. So if that trade um, wins, the nice thing is that you stand to make 5 times that. So you're risking 0.25%. But if the trade goes in your favor, You could make up to 1.25% is the cap. That's the cap on how much money you could make. It's just 5 times whatever you're risking, right? Now, if you have a losing day, what we do is we follow the sequence through. So I use this 1.5 multiplier. What this means is that each day that I lose, I increase my risk to the tune of, well, it's just 50%. It's 1.5x, which is just 50% increase each day. So if I lost on 0.25%, the next day I'd go to 0.38. If I lost on 0.38, the next day I'd go to 0.57, and I'd follow that sequence all the way up to 1.94%, which is day 6. So I basically need to get a big breakout day within 6 days. That's it. I just need and not, I mean, I shouldn't say it's like, oh, that's it. Sometimes it's hard to actually get to those breakout days because it takes a while and you have to basically get punched 5 times in a row. You have to get punched both ways, sometimes 5 times in a row, just to get to a pretty substantial win. But that's what it takes sometimes. You just kind of have to have that Rocky mentality of, okay, I got punched, perfect, I'm coming back tomorrow. Got punched again, perfect, I'm coming back tomorrow. And if you do that, those that are bold enough and have the tenacity and grittiness to just stay with it are those that are going to make it with this strategy. And I got to touch on that part at the end again, but I got to keep going here. So this is very important because this is what provides the edge with the strategy. Because if you were to just set up this trade every single day without using the sequence multiplier, let's say your favorite lot size was just like 1.0, like just one contract per trade, you probably wouldn't make very much money if you didn't use the sequence multiplier. Okay, because some of you might be thinking, man, I don't want to use a sequence multiplier. I just want to place the trade every day and see if it breaks out. Well, you can do that and you'll actually probably make either a little bit of money or just break even, but you're not going to, you're not going to really get anywhere, is the story I'm trying to tell you. You must use the sequence multiplier if you want to actually grow your account. So you have to kind of increase that risk a little bit upon each day to get where you want to go. So let me show you what this looks like in action. So if we go back to the journal here, you can see like a successful, let's actually go back because we had a really good sequence over here that made a lot of sense. Yeah, let's do this one right here. So this was a sequence back in September. This was on September 17th is when I started. So I actually had a win the previous day. I had made some money, not a lot, but I had made some money, as you can see here on the 16th. So on the 17th, I went back down to my beginning sequence. It's called the default, which is 0.25% risk. I took that trade and I lost. As you can see, it's marked in red. And so this is the loss right here, $250 on a $100,000 account. And then I also lost the other way, you'll note, right? It's like this is 2 entries for the same day. So I lost the buy and I lost the sell, both on the same day. When that happens, again, that's going to happen 2 to 3 times a week. You just get back up. You wipe yourself down, you put square your chin up again, and you come back the next day and you go to 0.38% risk. So you can see that I increased that risk to the next level in the sequence, which would be 0.38%, which is exactly right there. Okay. What happened on the 18th? Well, I lost both ways again. All right. So I lost $380 both directions. I got 2 entries in there. Not fun. You can see how that would be. In 48 hours, you took 4 trades and you lost all 4 of them. And yeah, so you can see pretty quickly, you can imagine yourself doing this, and pretty quickly you can be like, oh man, I don't know about this, right? But hang on here. So you're going to see why I do this in a second. Okay. The 19th, I actually get a win on the 19th. It was a decent size win. I got to, I was risking 0.57%. So that would be the 3rd step in the sequence. And I did get a win here. But here's the issue. I made $809, but that $809 wasn't quite enough money to cover the losses on the first day, which mounted to $500, and these 2 days right here, which mounted to like $760 a piece, plus the $500. So you'd be looking at like $1,260 of loss. between these 2 days, and $809 is just not going to cut it. So when you have a winning day, you actually stay at the same sequence and you go back to 0.57. So you're not giving up, you're just continuing on until you get the big day. So then you get to September 20th, and that was 0.57%. And we ended up losing both ways. And so here we go again, right? I just lost all the money I made from the last day. Great, right? But what's the attitude? Square your jaw up, square your shoulders up, uh, brush yourself down, come back the next day. Look what happens. Go to fourth day on the sequence, you risk 0.86%. Massive breakout day on September 23rd. You make $4,239. All right. So there you go. So if you look at if you do equal sum here, um, and you add up the win plus these two losses plus this smaller win plus these losses, you add everything up, and that's going to be a total of $2,648 net profit. Your mortgage is paid. Right? See what I'm doing here? See what we're doing? So like that's the power of this overnight trading strategy is like you're basically trying to capture a breakout market. And we know that the breakout market's not going to happen every single day. It's going to happen during the London/New York overlap. That's why we take these overnight trades every single day. And then what we try to do is get us closer and closer to the breakout day with the most and biggest lot size possible within reason, right? Within risk management to get to that big win. All right. So that's why it's an important thing to use the sequence multiplier. Imagine if you had just kept, let's say you had just done the 0.25 again. I'm going to change this for a second. Let's do 0.25. See that win? It's only $1,200. I mean, cool. You make $1,200, but you're still down, right? So when we increase to the appropriate sequence multiplier and appropriate sequence setting, that's how you're able to get to these profits. Obviously, our net on this was $2,600. So even though we made $4,239, we had to give up like, what was it? $1,600 of that went to paying off losses, but the other 2,600, that's your money. You get to keep that. That's yours. It's a beautiful thing. Okay. So that's what we do. And then you'll notice what happened the next day. We go back to 0.25. So on September 24th, we went back to 0.25. It was a winning day. We made $500. And so we went back to 0.25 again. We lost on the 25th. Actually, we lost on the 25th one way, but we made money the other way. And so because of that, we actually this is one of those scenarios where we still made money because lost one way but won bigger the other way. And so because of that, it was a profitable day, and you go back to 0.25% again. And then that was a loss on the 26th. You go to the 27th of September, lost both ways. Then you go to 0.57, which is step 3 in the sequence. Lost one way, won the other way, but because you made more money on the sell trade, we stayed at the same 0.57%. So it was a profitable day on September 30th, even though that win was not big enough to cover the losses. So we stayed at 0.57. Then you get to October 1st, and that was a big breakout day at a decent size multiplier. And so these two wins would cover these losses. So if I do equal sum and take the wins and the losses of that sequence, do we cover? We do. Not a huge gain, but it does cover. And so since it covers, you go back down to the default, which would be 0.25%. And then this was actually a good one on October 4th because we had actually lost for 2 days in a row, but then we got a huge win on October 4th. And so you can see just 3 days later, you get this big win, add those losses, and then you're left with a net of almost $1,200. Okay. So that's what we're trying to do with this strategy. Now, really important thing. This is very exciting. I'm sure some of you are just chomping at the bit. If you're new to this, you're chomping at the bit like, man, I got to get this going because it's exciting. It's averaged about a 4 to 5% return a month on the 1.5 multiplier matrix settings. And it's just a 10-minute a night thing. You just set up your breakout trade every night, make sure that you use the appropriate risk and then you just close the trade the next day before the New York close. And that's just rinse, repeat, rinse, repeat, rinse, repeat, right? So very, very exciting strategy. Now, let me show you some of the dangers though, because obviously there are losses involved. You've seen some of those losses. But let me show you the worst case scenario because it's important to talk about worst case scenarios here. If you were to lose every day in a row, let's say you didn't get a breakout. Let's say you went all 6 days and you never ever got a win. Just the market was dry. It left you high and dry. And you got nothing, which can happen. We even October was kind of rough. We had some times that were similar to that. We made it out okay. At least most of us did, right? But it can be devastating when you hit those losses and you're like, shoot, am I ever going to get a win? So that's why I said you got to square up your shoulders and lift your chin up and prepare to fight again. Because what happens is if you're not able to go down the sequence to the very end, you can miss out on a lot of profits, right? Like for example, let me show you like let's just use that one we did. Like here's September 23rd. This was a really big day. It was day 4 of the sequence and you had made $4,239. Let's say you had skipped that day because, let's say you were kind of nervous about losing more money because you had already had 3 days in a row of losses and you had lost both ways for 3 days in a row. And you're like, this just isn't working. I'm giving up. Well, lo and behold, you find out if you had traded the 4th day, you would have gotten an extra. Yeah, well, you would have made somebody's monthly salary in one day if you had just stayed in the game for another day. So that's where a lot of people go off with the overnight trading system. I've noticed it's even happened to me. So I'm not trying to point any fingers because I've done this too. I'm just trying to help everybody. Where people go off with the overnight system is if they don't premeditate their tenacity and like they don't really know their commitment level up front. If you kind of go in this just like let me see what happens type of mentality, you're going to lose. I'm just going to tell you you're going to lose right now because you're not going to be able to get to step 4, step 5 or step 6, which is where a lot of the profits come from. Okay? So you got to be able to do that. So if you're kind of that person that's like, let me just try this and see what happens, then do it in a demo account. Okay, have the high level of commitment, but do it in a demo account. Plus, you should do it in a demo account first before you do it in a prop account. But I really don't want anybody going out and just buying a prop from account just because they want to do the overnight system in a prop account. Now, eventually, I'd love for you to trade the strategy in a prop from account, but you got to make sure that you know what it's like to go through several wins and what it's like to go through several losses. Because even when you win, you also have to be pretty good at holding on to these wins. For example, this week we had a really big win right here 2 days ago. I made $4,288 on one trade. Now, here's the thing. If you had closed that trade, let's say you decided to close that trade in the morning, you might have only made about half that. Now, if you had closed that trade in the afternoon when you're supposed to close the trade in the afternoon, you would have made, double your money, right? So that's why you got to go through a demo because you got to know what it's like to win and how to handle wins. You got to know what it's like to lose too, because handling wins is just as important because when you get one of these runners on your side and you close the whole thing before it has a chance to finish the deed, you could really cut yourself short big time. Okay. And you might not feel the pain of that because you're like, well, I won. But you need that other $2,000 to make yourself profitable or to cover a loss if you've had losses up to that point. Which, if you're making $4,000 on a trade, then that probably means you did have losses up to that point because the only way you can get to that much profit is if you probably did have a few losses. Anyways, okay, back to the worst case scenario. So the worst thing that can happen is you could go 6 days in a row with no wins. And so if you sum up all these numbers times 2, because you're taking 2 trades, right? You're taking day 1, 0.25% in both directions, and then day 2 is 0.38 and so on. If you sum those numbers up, multiply it by 2, and by a negative number, you would wind up with about minus 10 or 11%. So if you lost both ways for 2 days in a row, or for 6 days in a row, excuse me, and you never had any type of win at all and you had full losses, the worst thing that could happen to you is you would lose between 10 and 11%. And that is the worst case scenario. For some of you, that's a sigh of relief. For others, that might be like, oh my gosh, 10 or 11%, I can't afford that. And so the question, if that's too much and you can't afford 10 or 11%, you might want to subscribe to a more conservative setting, which would be like the 1.25 multiplier. It only multiplies at a much slower rate. And so this is for some of you, this might be exactly what you need because you don't typically risk as much money. Well, you won't risk as much money with this setting. It also buys you an extra 4 days that you optionally can use if you need to use those extra 4 days to get a profit. Um, this is a much more conservative style. So obviously you'll lose less money on the losing periods, but at the same time, you will also make less during the winning periods. So being a little bit more bold and having the tenacity to do something will actually pay you off like if, and I'm not trying to say like, oh, like who's more bold, sometimes it is appropriate to go with the lower risk setting because that's all your account can handle. So I'm not trying to say that, you have to, show me how aggressive you can be to make more money. Sometimes it's actually a smart and an intelligent thing to do, to go with the lower risk setting if that's the right thing to do. So you kind of have to know where you're at with things. In my opinion, I think the 1.5 multiplier is a good setting to go with. Um, but I have had my fair share of prop firm challenges that have drawn down, 6%, 7% before they've gotten better. Um, and so I want to make sure that that's clear too, that you could be looking at prop accounts that could draw down 5 or 6% or 7% before they get better. And the other problem that I see sometimes is some people will get down to 6, 7% drawdown. They realize they only have 3% left. And so they give up and then they can't continue. If that's happened to you, then you may want to consider using a more conservative setting like the 1.25 multiplier. So anyway, I hope any questions up to this point, guys, because I got 5 minutes left to recap a few things and I got to show you one more thing before we get out of here. But every night you're going to come in here and you're going to take these trades. And the way you finish off the application of the trade is you're going to use what's called a lot size calculator. So we have one on our website under free tools. You click on lot size calculator right here, and you're going to use this every single night. You're going to make sure it says euro dollar. Base currency is in your local base currency. Then you're going to put in how many pips you're risking. How do you know how many pips you're risking? It's just the number it's just the number of pips between the Sydney high and Sydney low. So you can measure this, or you can just hover over your projection and it will tell you this says about 11 pips. So I would come into the lot size calculator and say 11 pips, change my account size to whatever my account size is, leave the pip size alone. And then right here in risk, you just follow the sequence multiplier. So if you're on day one, you'll type in 0.25. If you're on day two, you'll type in 0.38 and you'll just follow the sequence multiplier. Okay. So we'll do 0.25 just to pretend it's day one. You'll click calculate. And then this will then tell you right here, this will tell you exactly what you're supposed to be risking. So on a $100,000 account on day one, you're risking $250 per trade. You'll need a 2.273 lot size or 227,000 units basically. And then this is how much risk you would take for that day. And then you would go into your account and actually take the trade from there. So you'd go in and be like, okay, I'm going to hit buy and then put in the buy stop. Here's my buy stop price right here. Here's my sell stop price right here from the projection. And then you would just type in the pips, right? So if you're risking 11 pips, you'd risk 11 pips. If you're going for, right here, it says we're going for about 58 pips. You would go ahead and put in 58 pips as your target. Okay. So that's the application. That's how you actually go in and take the trade. If you guys need help and you're like, man, I don't know how to do that. Please help me. You can definitely book one-on-one calls with me on the website and we can, in fact, I don't have them open, but upon request, if you need an evening call with me, I can do evening calls. So, but they have to be requested. So just send me an email and be like, "Hey, Steve, are you available tonight? Are you available tomorrow night?" And I'm happy to take the overnight trade with you. So I'll take my trade with you. You'll take your trade, and that way I can just kind of like walk you through the steps on your first or second night doing it. And then you should be pretty much good from there once you've done it a few times. But I just want to make sure that you guys can do this. Um, Bill says, are there videos on how to actually take a trade using TradingView and Awanda and Forex? Yep, I can. Yeah, and I can walk you through that. I do have a call. I think I have a video. Here, let me write you down as because I have a few other emails I have to send out with some videos. Let me find the video where I've done a demo on that because I actually have to get going. But and we're basically at the end of the call here. But I got you down here, Bill. So Bill Bowers, I'm gonna send you an email with the video on. Let me write this down. Um, on how to actually take the trade, like actually taking the trade in Awanda. Okay. Okay, I got it. Sweet. All right. Any other questions? By the way, one thing I want to show you guys. So if you guys go to the if you guys actually go to the website and click on members, if you go to members and then go to overnight trading, inside of overnight trading, there's two things here. One, you can read the book. So here's the book on the overnight trading strategy. Inside of the book is the matrix, so the sequence multiplier. So if you come to this here on page, I think it's on page 8 and 9, 8 here, here's the sequence multiplier. So if you need help with that, it's available right there. Lastly, you also have down here the results of each overnight trading strategy. So the full Sydney box method is the one I taught you guys tonight. We also have what's called the Reaper method and the half Sydney box. We have the full Sydney box and the half Sydney box method. So you can actually see the win rates, the gross profit, gross loss, net profit, average win, average loss, risk to reward ratio. Everything's in here. Okay. So, so you guys can kind of comb through and see all the statistics and things like that. So it's all under overnight trading. All right, guys. Well, I appreciate each one of you. Thanks for hanging out with me for an hour. Especially, I know I had to change the time when we did this, so thanks for hanging out with me. If you guys have other questions, feel free to shoot me an email. I'll be happy to answer those questions. And if you need that extra help, let's schedule a nightly call where we can get on for 15 or 20 minutes and take that trade together. All right, guys. Have a fantastic rest of your day, and we'll see you guys in the next webinar.